Dear clients, I'm Gillian, Phillip CFD dealer. In today's episode of Market Watch, we will be sharing about downside risk prevails for US equity market amid rise in volatility. All four US equity benchmarks took a tumble last week as Russell 2000, Nasdaq Composite, S&P 500 and Dow Jones Index ended the holiday shortened week down by 2.5%, 2%, 1.2% and 0.9% respectively. US small caps and tech-oriented stocks, which are typically more volatile, underperformed the blue chip benchmarks in the global equity risk-off amid an escalation of the Greek saga after its Eurozone bailout extension expired and the indebted Eurozone nation missed an IMF payment. Looking ahead, Greece and the Troika lenders will need to return to the negotiation table regardless of the 5th July referendum outcome, though admittedly, a no vote would raise the risk of talk stalling, hence increase the possibility of a disorderly Brexit down the road. Now, back to doing health checks on the US economy. I believe the fact that economic data releases were mixed helped to simmer yet another layer of market uncertainty. Actually, the week started well as better than expected ADP numbers appear to boost market sentiment. However, a somewhat less positive non-farm payrolls data and a flat wage growth released on the last trading day provided a setback for the notion that a tightening labor market was finally stimulating consumer spending. In cross-market actions, it is noteworthy that the VIX index, a measure of equity market volatility, saw its biggest jump since January, rising some 20% to end the week near the 17 handle. Meanwhile, a somewhat disappointing non-farm payroll report, alongside a flagging labor participation rate, hurt expectations for a rate hike before the end of the year. In fact, according to CME Group FedWatch, market expectation is currently indicating an increased likelihood of the first US rate hike to be pushed back to 2016. In summary, the week ahead is poised to be an eventful one and likely characterized by rising volatility. On one hand, investors should expect the Greek saga to drag on, while awaiting the release of June FOMC minutes to seek further clarity on the latest Fed's policy direction. On the other hand, investors will also start to be preoccupied with the US second quarter 2015 earnings season as it gets ramped up with Alcoa releasing its results on 8th of July after market close. Clients may consider using Phillip CFD to trade equities and indexes across market to capitalize on trading opportunities in both rising and falling markets. In addition, you may also trade using many more benchmarks based on different strategies which are available with Phillip ETFs. This is all for today and hope to see you soon in our next round of market commentary. Thanks for watching.